Welcome to BuzzHouse, a Baker Tilly podcast where you can find all the buzz around multifamily housing. I'm Don Bernards, the partner in charge of Baker Tilly's multifamily housing practice.
And I'm Garrett Gibson, a partner at Baker Tilly, also specializing in consulting on multifamily housing transactions across the country.
Each week, we'll bring you a guest or a topic in the multifamily housing industry that will help you win now and anticipate tomorrow. Let's get started. ESG are three letters that probably a decade or so ago were rarely uttered in the multifamily space. Today, ESG is an acronym that pops up in many places. ESG, or environmental, social, and governance, are becoming a top priority. It is reported that 96% or so of S&P 500 companies now report on their ESG efforts. ESG is also becoming top of mind in the multifamily industry. Very excited. Just recently at our Develop conference held in Atlanta, I had the pleasure to meet our guest today, Perfecto Sanchez. Perfecto is the co-founder of the company Equity Quotient. Again, very excited to have you, Perfecto, into the BuzzHouse today. Equity Quotient helps to analyze and measure the S in ESG. We're excited to learn a lot more about this topic, a lot more about Perfecto and how he views this world, and we're going to jump right into our discussion. So with that, I'm going to turn it over to Garrick. Garrick?
All right, thanks, Don, and Perfecto, welcome to the show.
Thank you for having me.
Obviously, before we get started, we usually ask our guests to tell our listeners a little bit about their background. You got an extensive resume there, so instead of just kind of doing it briefly, maybe go into what it was like growing up in New York City and how it led to 10 plus years of corporate experience and a trip to Tulsa to create Equity Quotient, or I guess that's where it came out of. But then also we want to know specifically, what's the story with being the first American to row across the North Sea? You got to tell us a little bit about that.
Yeah, for sure. And speaking of trips, I mean, we can't skip over the 2 trips I took to Iraq as well as an infantry officer. And yeah, I mean, it kind of did start for me growing up in Harlem, New York. Product of a single mother household. So I have to give a shout out to my mom. But yeah, I mean, oldest of 4 kids, grew up in Section 8 housing, going to really Title I schools, so like a product of my environment. And I remember I got into a fight in 2nd grade. Like, who gets into a fight in 2nd grade? And my mom was like, okay, we really have to get you out of this situation. And access to education really changed my life. I tested into a gifted public school, which is somewhat of an oxymoron. But for those that don't know, New York City is one of the more segregated school districts in the entire country. But really, I went from Harlem, a mile south, to a public school on the Upper West Side, and that changed my entire trajectory. And I'll age myself a bit, but I remember my coach was like, listen, you're a good kid, kind of a punk, but here's this VHS on this place called West Point. I was like, what the heck is West Point? Then I popped it into my VCR. And for those of you that may not know what that is, that's how we used to watch movies back in the day. And, like, lo and behold, I ended up getting accepted. And I remember a conversation with my congressman. And he was like, why do you want to go to West Point? Because people that looked like me weren't really even applying, let alone getting in. And so I was accepted. And 9/11 actually happened my freshman year. And so no one in my family had ever served before. And so it wasn't necessarily like innate for me or like an option that was ever really on the table. But again, education changed my life. I was introduced to such an incredible institution and this concept of service, purpose, and mission, and also community. And going through that school, learning about leadership, learning about sort of choosing the harder right over the easier wrong, as we say, led me to eventually choose infantry, which is one of the more, let's call it, challenging branches that one can choose. I was like, listen, if I'm going to do this thing, I'm going to go all in. And eventually went to Ranger School, Airborne School, and was on that track and had 2 pretty intense deployments. So for those of you that may remember, I mean, Fallujah, Ramadi back in 2005, 2006. And so I was in the Battle of Ramadi in 2006 and working for General Petraeus under his guide of the surge. So really sort of changing and updating all of our tactics from Vietnam era tactics of these operating bases to building outposts in the middle of the city. And I mean, somewhat of like a long-winded answer, but really for me, it was always like common sense. I mean, like, if you want to sort of understand how to best solve a problem, you have to be boots on the ground with the people, listening to how to create like what the most impactful solution was. And so my life, started in the projects in Harlem. And eventually I was effectively leading a new strategy for the United States Army as a young second lieutenant on the streets of Ramadi. And that sort of mindset always guided my career. Where do I need to be on the battlefield to make the biggest influence on the situation? And I'm just very grateful for my mom, the teachers along the way, and the mentors I've had to sort of instill that mindset in me.
That's awesome. And then how did you go from there to Equity Quotient?
Yeah, for sure. When I got out of the Army after 6 years, again, I loved it. It was as my platoon sergeant taught me, it was a privilege. Like leadership isn't a right, it's a privilege. And so it very much was a privilege to have the sort of sacred responsibility of leading our nation's finest men and women into combat and to really care for their welfare. And so I knew I didn't have to be 6,000 miles away to make a difference in the world anymore. So I asked myself, okay, what's next? And I went to this military job conference and said, listen, Kraft Foods is going to be here. And they're like the best of the best in marketing. I was like, well, okay. I went Ranger school, I went infantry. If Kraft is the best, and that's what I'm going to do. And mind you, I have never taken a marketing class in my entire life. And in the interview, I legitimately said to them, listen, if I can sell democracy, I can sell powdered soft drinks. Like, I want this job. And the hardest thing, like anything, is getting your foot in the door. And they took a chance on me. And the only person in my marketing class that didn't have an MBA, but I listened, I learned, I worked hard, and had a fairly, one would say, successful job in corporate America. But again, I was leading trade marketing for Evian Water North America, no small role. But I asked myself, like, is importing French bottled water really going to change the world? No offense to the French, no offense to Evian. But again, is this where I need to be on the battlefield to make the biggest difference? And for me, the answer was clear. And once you know the difference between right and wrong, like there's no point in choosing the latter. So I said to myself, if I'm such a good marketer, let me go at it alone. And I started a small shop. I would never dare call it an agency, but I started a small shop doing consulting and marketing. And our whole mission was to elevate purpose as a way to drive growth. So not purpose for the sake of purpose, but really unlocking this emotional connection that I think businesses have the opportunity and the responsibility to have with their customers and their community, to really connect with them on a level that, again, advances our industries and our society forward. And I always felt that businesses had, again, a responsibility for purpose. And we had incredible clients, everything from American Express to the city of Philadelphia, to community foundations such as the East Bay Community Foundation, which is a multi-billion-dollar fund investing into the East Bay. And it was when I was working with Tulsa and the George Kaiser Family Foundation to launch a $20 million fund in Tulsa at the centennial of the Tulsa Race Massacre. For those of you that don't know, it was one of the worst atrocities in our history that was actually, for the most part, erased from our history, where there was a burgeoning community of Black millionaires and a fully functioning society that helped accelerate and maintain Black wealth. And it was massacred back in 1921. And so at the centennial, the city was looking at starting a fund to invest in Black tech companies to help close the racial wealth gap. And that's when I realized, like, well, heck, I've been building strategy for the last 8 years, but how am I supposed to measure the racial wealth gap? And I was looking at data and any way to sort of pull in, like, where are we now? Where are we going? And is any of the stuff that we're actually doing, is it going to work? And on every dimension of work, it's like, is it going to work for the shareholders that are investing, but also the stakeholders, which are the tech companies themselves and the community that we're meant to sort of benefit? And that introduced me to, as Don mentioned at the top of the call, this concept of ESG, which, it means environmental, sustainable, and governance, but it's meant to advance sustainability. And I think it's such a misnomer, which is super unfortunate because it's become very politically charged. And there are some people on the side of the fence that think ESG is part of the woke agenda. And I'm like, really? Like, I look back to my infantry days and look at it as like market intelligence. Like, who wouldn't want to understand what's happening in their area of operations, in their community, in their landscapes, to make more informed decisions? It's actually a huge competitive advantage to have intelligence. Like, I mean, that's what gives militaries like major advantages. And it's this concept of anti-woke. Like, why wouldn't you want to know? And the whole intent of ESG, I believe, is to de-risk decisions. So if you're a company and you have a factory that's now going to be exposed to no longer 100-year floods, but every 20-year floods, like, that's a huge liability for you. And so the more you can understand the environment that you're operating in, that would actually be better for your shareholders and your stakeholders. Social, the more you understand how your landscape is evolving, the better you can create programs, initiatives, and products to best serve the interests of your community. Same as governance. I mean, making sure that you have the right team that has the skills to lead your company forward. And so, again, like, coming back to how I started, I was like, I need more data to improve my company. And when I looked at the marketplace, there's nothing out there. And my incredible business partner, Christina Van Houten, and I interviewed about 600 executives to see what they're using from an S standpoint. So to really look at, like, okay, what's happening with the people in our ecosystem? And there was nothing out there. So we built it.
Wow, perfecto. I've taken frantic notes. I got a lot of good things out of that. Perfecto, as a lot of our listeners are in the multifamily space. Can you drill down maybe even back to the S? Like, what can we be thinking about in the multifamily space about some of the impacts that maybe you measure, people should be considering measuring and thinking about to, like you said, to do their business better?
For sure. I mean, there's so many different dimensions that are happening in sort of our society right now. And as diversity is becoming more of a reality, and I think a major asset for our communities that we're meant to serve. I mean, like, I look at sort of like even workforce housing or the concept of workforce housing. And I was having a conversation the other day where workforce housing does not have to be affordable housing. And there's dimensions to this. If we can create housing that actually serves our community and is more accessible for a big portion of the population that we need to be truly incorporated into our society, that sense of inclusivity and equity actually will drive business forward, will drive our society forward. And I look at a lot of what's happening in our major cities where people are just getting priced out. Residents are having to move further and further away and therefore have long commutes. That's going to like trickle down to like, why are there not enough servers at a restaurant? Why are there not sort of enough rooms available at hotels? Why is there sort of like this huge gap in sort of our industries? And so when I look at multifamily houses or real estate as a whole, the more data we can get in terms of what rental prices are, what home prices are, and even inventory availability, like balancing that equation, I think will really help your listeners, again, get a competitive advantage to say, okay, like here's how I can look at my portfolio, look at my projects, and build something that will have a major utility for the market that I'm looking to serve. And hopefully, like that's exactly why we built Equity Quotient. We know the data is out there, but it's very complicated, expensive, and just very disparate for a lot of businesses to do on their own. And so with my business partner and I'm going to use a buzzword, but we've been building and working with AI for the past couple of years, and we're leveraging AI and the advancements there to sort of organize this data in a way that's very easy to understand. And what's super important around the S and AI is that we can't just use data that has existed for a very long time, because we're only going to propagate past injustices, and we're only going to repeat the same mistakes that have existed in this country for a long time. So we, as Equity Quotient, have a big responsibility to unpack the bias that is innately in the data and to constantly update our algorithms to make sure that we're presenting data in an unbiased way to allow leaders to, again, de-risk their decisions about how to build their projects to best serve the evolving landscape that is just the reality of this country right now.
Sure. No, very good. Thank you for that overview. Just thinking, I know I know the company itself has only been, like you said, around a few years, and I'm sure you're working on, and who's like a typical customer? Is it, again, back to real estate, is it governmental entities, for-profits, nonprofits? It's all of the above?
Yeah, no, it's a great question. So our initial thesis was that we were going to best be positioned to serve the financial sector because of the mandate of the Community Reinvestment Act of 1970, whatever. And so we really started working with some major tier one multinational banks. But ironically, Don, we were pulled into the real estate sector very quickly because this is a sector that moves very fast, has a pulse on the landscape better than any industry. But if I may say this, doesn't necessarily have a lot of the technical infrastructure that gives it the competitive advantage that it needs. And so we had major firms reach out to us, everything from top 10 commercial real estate firms to even small local firms asking us, okay, I want to put $100 million into this region. How can I really understand, is this investment going to actually serve the region that I'm meant to be investing in? Everything from supplier diversity. How can I make sure that I have access to the true landscape of what is the diverse suppliers that exist in this region? How can I make sure that I'm pricing my units at the exact price point that it should be in order to drive return? And even more importantly, how can I communicate to the stakeholders in this region that this is actually an investment for the community? And so while our next sector was real estate, we do have a lot of relationships with chambers of commerce and economic development organizations who are also saying, hey, we want to aggregate all the small businesses, diverse suppliers that exist in our region to make sure we are being the best partners for the businesses that are looking to invest in our region. So it is a very symbiotic flywheel, as we'd like to say, so that everyone can be talking the same language and say, okay, if there's a mandate where I need to have 30% diversity in order to get some tax credits for my project, how can I make sure I'm working with the Chamber of Commerce, working with the community to understand who those businesses are, how to best engage them, and then how to, again, communicate back to the community to really sort of de-risk dead deal costs and to say, yes, I have a full strategy and not just a mandate, but the tools to actually bring this project to life very efficiently. So we look at it as a way of saving time and money for real estate developers as well.
Thanks. And Perfecto, specifically for looking at affordable housing, you mentioned you have all these different ideas and data coming through AI, and you're obviously trying to organize it. But do you think you have information which possibly could help support a business case, for instance, for where to develop?
Yes. And so beyond just the demographic data that we pull in other factors that can help developers sort of understand market intelligence. And our community health dashboard is a great example of that. We're pulling in air quality, we're pulling in water quality, we're pulling in household income, also sort of access to healthcare, access to education, and even in some instances, transportation time. So a real estate developer can look at a region and say, hey, this will be great to sort of bolster the benefit of this project I may want investment for or approval around, to say this affordable housing project is actually in a very attractive area that will provide incredible access to healthcare and education, but doesn't sort of follow the past patterns of looking at where to put affordable housing in less desirable areas. So it can really be positioned as a good investment for the city, for the community, and still follow the basic market rate return, which is super important. I don't want to ever pretend that, we're not looking at how to help all stakeholders, and investors are a big part of this, but we want to make sure that our data can help tell a story around how a project can help a community across multiple dimensions. And so we do have the ability to not just help canvas an area, but also compare different areas. So you can pull in multiple markets, multiple cities, and compare, let's say, a Cleveland and a Columbus. You can compare a Miami and a Tampa and look at sort of what is the best market for you as a real estate developer or investor, or whatever capacity, to helpfully greenlight a project.
Well, and that's interesting too, because you mentioned it supporting what those impacts to those residents might actually be in these affordable housing projects. So, obviously a lot of developments are having financial gaps in affordable housing. As we know, just rates have been going up and some of the funding is shrinking. So I was wondering, are there opportunities in the data that you have in grant applications?
So I don't want to pretend that I know a lot about real estate as a whole. So I would actually ask you, what data would be most useful that you would most like to see that would really help advance sort of Baker Tilly's incredible position in the marketplace? And by the way, the conference that I met Don at was just absolutely fascinating to see so many brilliant, diverse, sort of passionate leaders who are truly looking at how to address what not just is a problem, but is a real opportunity in the marketplace to say, hey, let's pull together our resources. And again, that's, I think, a huge responsibility for leaders. It's okay, let's bring everyone together in a room. Let's talk about this. And I think that's really how we like to look at our opportunity at Equity Quotient. We want to learn from Baker Tilly and say, okay, what data would be most useful to your organizations? Because we have access to AI, we can pull in disparate pieces of data. And already we're pulling in sort of public data, which is census tract, Bureau of Labor Statistics, HMDA data, which is the Housing Mortgage Disclosure Act, very richly attributed data, and even HUD data. And Don, as you heard on my panel, we're working with the city of Birmingham, who's working a lot with sort of HUD funding to provide assets and access to capital and incentives for developers to come build in Birmingham. But I would love to hear from you. What would, let's just say, a Baker Tilly dashboard look like? Or what would an ideal tool look like for you? And let's build it.
I think that's a really good follow-up, Perfecto. And I will follow up with you with that, but just a couple of things on that. It's a lot of it is about, outcomes. And we're talking there's a lot of discussion around health and housing and how does access to health systems and so forth impact lives and education. So I think there's a lot about, even when we're applying, as Garrick said, we're applying for grants and federal, state, it's what will you be thinking about? What do you want to measure? What's really important for the residents of an affordable housing property? And I think the biggest question, most like you said at the start of the show, many people don't have tools to measure these. So how will you measure those is a big question. A lot of people don't have answers.
Yeah.
How will we measure these outcomes?
Yeah. And one thing we heard a lot at the conference was around new market tax credits. There's real reporting around new market tax credits that firms will have to fill out. And instead of that being a barrier, let's look at it as an opportunity, as an asset. And so if we can help your firm sort of gather the data and to lower the barrier to these tax credits, we're going to get more projects being greenlit, subsidized, funded, and to be built, and more so serving the community, which is the ultimate goal.
Perfect. Perfect. Maybe it's somewhat related, and maybe it's in the eyes of the user of the information, or I don't know if you help frame it. How do we measure success, right? We have so much data. You're gathering data, your AI. What is success? How do we measure success?
Yeah, great question. And one thing that we also have recognized in a lot of our case studies is that success is not a one size fits all. A project in the Northeast and what success looks like there, it's not the same as what a project might look like in the Pacific Northwest. And so we look at the S in ESG as a way of we use the term portfolio optimization. Okay, how can we pull in the data, understand what's happening in the marketplace to get more projects funded, more access to resources for the community, and what that right balance is around diversity. Because diversity is a very dynamic concept. It's not static. It's not good. It's not bad. It's meant to really be a way to sort of accelerate our society and to make sure that we have a more inclusive society, to have a more productive economy. And so ultimately, if I had to choose, and this is my personal answer about what success looks like, it's a thriving, inclusive economy that's serving our population and serving our communities to really help sort of our country move forward, help businesses move forward, and to help sort of provide access to the fundamental things I think every resident of our country deserves. Full circle, access to education changed my life. I'm half Jamaican, half Puerto Rican, grew up in Section 8 housing. I should have been a statistic. If I look at a lot of my peers that did not make it out of, Harlem, New York, but I went on to earn an appointment at West Point, served 2 tours overseas as an infantry officer, and I'm now founding my 3rd tech company. And so the more we can understand how to best serve our communities, I think we can really maximize the greatest asset in this country, which are our people. Businesses have a responsibility to really make sure that we are including our population in order to create what is a relative definition of success.
Well, Perfecto, hey, thank you. I mean, the ideas around what you're trying to do with data is pretty amazing, especially it's applicable everywhere, really, especially in the housing market, and I think even deeper into affordable housing. But before we wrap up, we still have that one last question that wasn't answered, right? So how did you become the first American to row across the North Sea? I know that it was for ocean sustainability awareness, but give us the skinny on that.
Yeah, for sure. Listen, I joined the Army for a reason, not the Navy, because I didn't want to be stuck on boats for long periods of time. But I was working at Evian Water, and to be honest, I just wasn't happy and didn't feel like I was leveraging my skills to the greatest of my potential. And a dear friend of mine, Dealey Urban, who is just an incredible human in his own right, challenged me actually. He's like, hey, we're going to be rowing across the Atlantic. We're doing a training row across the North Sea in a couple months. You should do it. I'm like, no freaking way. That sounds nuts. It's never been done before. Why would I ever do that? But again, I was in a place where I just wanted something more with my career. And one day I just you know what? I'm going to do it. And so I quit my job and I took a 6-month sabbatical. And this is before starting my agency. And for me, it was also a symbolic for I think what was a really big sort of barrier. I had the privilege of quitting my job. Not everyone has the privilege of quitting their job. A lot of people want to do good. And for me, this concept of doing good meant making a lot of money one day and being able to donate that money to charity, because that was the way I understood sort of doing good. But I realized that there's this major gap in our society of how can we allow people to change their behavior, but also to take action. And so I wanted the row to be a symbol for me that not everyone has the privilege to quit their job and row across the North Sea and raise $10,000 for ocean sustainability. But if we make doing good more accessible, and we like me as a business created a platform to teach people hey, you don't have to do this. You can sort of eat meat one less day a week. You can recycle. You can sort of reuse old clothing, or you can sort of walk to work, or you can carpool. All these actions are way more accessible than rowing across the North Sea. And then I found myself in the middle of the ocean, and it was absolutely terrifying, but beautiful at the same time, if you can only imagine. I'm going to throw some shade at my friend Daly. He actually did not make it across the North Sea. He was rescued by the Coast Guard. So he's still with us, but him and his team had to get rescued by the Coast Guard because they were drifting so far north, and it was going to make it harder and harder for a rescue boat to come get them. And you'd be shocked about what the scariest part was. It wasn't the 10-foot, 15-foot swells. It wasn't sort of the waves crashing over the boat. It wasn't the fear of us capsizing because we were tied in. It was the fact that the North Sea is the busiest shipping lane, and we're moving at best on a good day 3 knots, 2.5 knots, and these major freights are frigates or whatever you call them are moving 20 knots. And there's these highways and streets that you have to cross pretty much. And we're rowing as fast as we can to get through these shipping lanes. It would take us 2 or 3 hours to row across, and having to go on a radio in some instances, the crew not even really speaking English, because they're coming from all over the world. So that was probably the scariest part of seeing these boats come relatively close to us. But Yeah, that sort of transitioned my career from corporate America into entrepreneurship. And what's guided me is like I want to make doing good more accessible, and the row was a symbol of that for me.
That is absolutely incredible.
Great. That's great.
Good.
I'll try anything once, Don.
Well, that sounds good. Well, listeners, that's it for today's episode of the BuzzHouse. A big thanks to Perfecto Sanchez. Perfecto, I look forward to a lot of follow-up, a lot of great discussion. Thank you for what you're doing, telling our listeners about your important work with Equity Quotient. And once again, I'm Don Bernards.
And I'm Garrett Gibson.
Don't forget to subscribe so you don't miss an episode. For additional resources around multifamily housing, check out bakertilly.com. If you have a suggestion for the show, email us at bill@bakertilly.com. That's BUILD @bakertilly.com. See you next time on BuzzHouse.